So welcome. There's been a while without videos, so we want to give you an update about the website. It has been changed. It's .com. For the rest, the structure is similar. We have introduced a few features, live features. So there are basically data fed for currencies, rates, and economic calendar. Then there is very latest, let's say, news fed directly from FX trades that you find over here. See here the calendar. Latest news. You see that there are some articles highlighted, but you have the live overview from FX trade directly. But today we want to give you an overview of the articles that have been written so far. It's a bunch of 12, I think, or 10. We're gonna go through just very quickly, and we want basically to highlight only 2 or 3 of them. So from the last, being in the money, we will see later what it is, but it's basically how professionals enter the market all the time, ensuring profits and profitability. Latest lessons learned is a nice thing about a few trades that have triggered, or not actually. The power of Set&Forget is the power basically of the strategy when a trade is basically determined and we let it run without interfering, or with minimum, let's say, interfering. How to trade with the brain it's a bit more articulated explanation how to trade using all the tools available, fundamentals and technicals. Macroeconomics and forex explains the relations between global economy and the forex, the currency markets. Pinbar setups is pretty much a technical comparison between good and bad setups. Trading versus betting, we're gonna look into it. It's very, in my opinion, very good article. Very interesting to see how different and far these two words are. Buying options is specifically for this type of trading. It's just, you know, a very random, let's say, judgment about it. Thinking like a bank, it was, and one let's say the second article is it explains why we should trade and think like a bank. Fasten your seatbelt was the first. It was about stop losses, not super, let's say, fancy, but very useful to know. So let's start going into let's say more into depth for being in the money. Being in the money basically is the attitude that all professionals have when they apply this strategy. They apply this strategy known that there are risks, but they have an edge, and this edge is to be developed through strict rules and money management. So they know that whatever happens on a weekly, monthly basis, depending of course on their strategy, it can be also daily basis, they're gonna come out clean, they're gonna make money, some money, possibly a lot of money, but they do know that things gonna go, let's say, through, because they have the edge, and they know that they enter the market only if they feel there is a strong possibility of being in the money. So there is strong confluence for the trading. Of course, you can always read them through the articles. We have seen that there are other learning articles and videos. So latest lessons learned are 2 cases. I think 3 weeks ago we talked about the Aussie that was posting a very important rejection of Fibonacci level, 38% on a weekly basis. So basically looked that the downtrend was resuming. What happened afterwards, so you have all the explanations, because basically the bank in Australia does not really does not accept so high Aussie because of the difficulty with exporting to China, which is also like going through a recession. So basically we discussed the possibility of that. Then what happened is that the dollar came out weaker than expected, so there was a period of consolidation. Now the thing is that nowadays, actually yesterday and today, the Aussie went our way, so it went through the double top, and now it's going most probably a few hundred pips down, resuming the downtrend. So that's very important to keep always your horizons and long-term views. The other one was more technical. There was an inside bar that never triggered on gold, basically. So this it is very important to always respect your rules. If you see that the inside bar should have never triggered the trade, basically. So let's see the next. The power set and forget. It's a very nice article, but I'm not gonna go through the details because you can read it yourself. There was Aussie New Zealand long, 31st of March. We set an order, and this order went straight away against our position up to 80% the original stop and loss, which means that if you were watching your monitor, you would freak out possibly, or just simply close the position, and then it went up again. So just read it through, it's quite interesting. How to trade with your brain. It deserves a long, actually it's a long read, I must say. So it talks about how you have to structure you have to select your pairs, instruments to trade, and use the tools that you have and that we offer you. Actually, in this case, we give you our advice to use the metrics, strength metrics, and the visual global analysis, we call it. It's basically a very detailed chart analysis with all fundamentals and technicals aspects covered as long as possible, of course. Macroeconomics and forex, it goes into details again about how different economies and interrelations between continents and big countries determine the moves and the movements in the markets. So have a read through. Pinbar is similar, let's say, concept. You have to read it through, you have to think about it. We can have a look very quickly, but it's not going to be most probably something that you can just grab. You have to understand it more in depth, basically. So that's what he's saying. He's saying basically that the shape of the Pinbar is not always it's not always the only parameter. Of course, the longer the better, but the level, the horizontal level, and the averages that this Pinbar is rejecting are very important, because they give the sign, they give the signal, confirmation that other big players are also looking at those figures to enter the markets. This is a very nice article, trading versus betting, because I have talked so many times to people that just say, just trading is betting, basically. There's nothing more wrong than that. There's nothing wronger. So that's what we are stating. We are stating that trading and betting, there is no way, they're totally different. So basically, but people have misconceptions, so they come to the conclusion that there is something in common, but the only thing in common is the risk. But with trading you can really manage the risk very well. And on the other hand, you with betting you don't have the control on things like football matches or anything that is very random and fate-based versus knowledge-based. When you enter the markets with a certain degree of certainty that is gonna go let's say in your favor, like a strong trend, you always tend to do 2-3 times your risk. Sorry about that. So whereas if you enter any very simple match or competition, the bookmakers give you very little. Let's say for 10 euros they give you 5 euros, which is 0.5 times, which is very far from the 2 times that we tend to make with trading. So this also plays against, but the most important thing is that you understand what's going on in the world and what's going on in European economy, or that there are news coming, and actually the news, and you enter after the news because that they have an effect, and you enter a train basically that is already going in your direction. Betting, you never know, you can hop in a train that goes completely against you and there is no way to go around, to go back basically. That's another very important aspect, that when you enter a bet, when you open a bet, that's it. It's either you win, either you lose most of the time. On the contrary, when you enter a trade, you always have the time to get out, to stop your losses or just reduce the losses, to get out, break even, or of course go to profit, which is the target basically. Right, just have a read through. Binary options, I'm not gonna go into it. It's very much like a technical analysis of why binary options are good for beginners only, basically, because you cannot make a lot of money, but they're very easy. You just enter, you say sell or buy, and you don't care about where it's gonna go and possibly where it has to be stopped, basically. Thinking like a bank, honestly speaking with you, I don't remember. So, I mean, I remember very vaguely, so I need to have a look at that. Right, yeah. Basically, it says that all banks hedge with our money, trade, basically they trade with our money, so they have to make money with that to be safe and to make profits. So all they do is meticulously checked, controlled, and it goes under scrutiny most of the time. And this is what we have to do. Of course, we have to keep also a very clean and long-term view on what the markets are doing. So it's important to basically actually it's emulate them, it's copy them. Why not? I mean, banks never lose, or almost never lose in these markets, so why not follow them? Fasten your seat belt is basically the way how important the stop loss, or the correct stop loss is, that saves you. So actually says that it has to be large enough with all considerations, because it's silly to save a few pips when you stop. Maybe takes you out, but ultimately the trade was winning one. So you go through. It's not super, I would say, exciting, but it is very useful, especially for a beginner, to be able to set your stop and losses. You stop loss and take profits. Anyway, tonight has been pretty much on the Johnny Nash music. I hope it was of your taste. Otherwise, maybe you discovered something new. Anyway, there will be a new article. I want just to announce it. It's not ready yet. It's going to be about mathematics about behind trading. There will be three concepts proposed. One is profitability, which is basically your profits, percentages divided your risks, your net exposure or gross exposure. It's a very important concept to really evaluate how your overall trading is going. And the other one is more focused on your strategy, the performance, which is basically determined by the parameters win ratio and risk reward. But we will talk about that more into details. You have to like mathematics to follow it, but you have to love trading and profits to read the conclusions. Right, so I look forward to that article and to speaking to you, to presenting to you. If you have any preference for the music, just let me know. So I'm gonna change. I'm gonna choose another band or artist. So take care and happy trading. Markets have been very predictable nowadays, with the Aussie going down, the dollar also going a bit stronger, especially against European currencies. Gold most probably falling soon. But all in all, there is a lot of opportunities to be in the money, to act like a bank, to leave our positions open and using the power of set and forget, and make the money, which is basically all about trading actually. So happy trading, enjoy it, and good profits.